Now, Morgan Stanley expect a sharp contraction in corporate earnings to weigh on US equities this year, and they see the S&P 500 lower at year-end at 3,900. However, Goldman Sachs take a different view and they're expecting mild growth from the S&P 500 this year. So, with the path of inflation unknown, analysts divided on whether the Fed will hike in June, skip a meeting, or pause rates, and global growth also in the balance, the path for US stocks in June is far from clear. So let's see what the S&P 500 says from a seasonal perspective. Over the last 15 years, the S&P 500 has lost value 60% of the time. And that's between the 1st of June and the 30th of June. It's seen an average fall of minus 0.3%, and the largest fall was 7.70% here in 2022, and we saw another larger fall of 7.63% in 2008. So, with a weak seasonal period ahead, traders should note that a sudden bearish policy shift from the Federal Reserve on June the 14th, which is when the Fed meet, could see stocks fall in line with its weaker summer seasonal pattern. Major trade risks. The major near-term trade risk here is if inflation cools suddenly and the Fed announces a rate pause when they meet on June the 14th. Remember, we are in the Fed's blackout period at this point in time. Remember that HYCM clients can access the SeasonX product in order to analyze over 25,000 different currencies, indices, commodities, as well as individual stocks. And all you need to do is contact your account manager for a free trial and you can get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.